Data out for Mexico and Brazil, which paints an interesting picture for the Latin American regions, so let's take a closer look. I'm joined by Aryam Vázquez, senior economist with Oxford Economics. So Aryam, Monday we saw Mexico's manufacturing PMI slip in May to a 7-month low as output dips. What can we attribute to this lackluster result, and is there potential for further cooling in Mexico's manufacturing sector?
First and foremost, it slipped. The index slipped, but it's still above the 50 threshold, which means expansion and contraction. It's still in the expansive mode. But we have to remember this is an index, or this is a sector which has been extremely vibrant in recent months, all since last year, and it has been very tied to the huge momentum being played out in the auto sector. Much of the manufacturing gains in recent months are driven primarily by the auto sector vis-a-vis the business cycle upturn in the United States, and thus, obviously, manufacturing has performed extremely well. We do expect that this moderation that we saw this month, we do expect some timid moderations in the coming months as well, but nothing that will underline or undercut, I should say, this momentum in manufacturing growth in Mexico. We do believe this will be the key driver of economic activity for the Mexican economy this year, and eventually this externally driven growth, primarily in manufacturing, we expect will spill over into the domestic economy and allow for services to pick up and allow for greater domestic demand dynamics to play out in Mexico later in the year.
Brazil's industrial production continued its downward spiral in April, declining for a third consecutive month to 1.2% in April from March. Many economists expect Brazil to suffer its worst recession in a quarter century this year. Do you agree? Is this data a reflection of this?
Without a doubt. I think the situation in Brazil remains highly concerning, and this industrial production data is just the latest data figure hinting and corroborating the deepening recessionary trends that we're seeing in Brazil. We're now projecting a contraction of 2.1% in Brazil this year, and I think at this point that risks remain to the downside. We have to remember this is an economy facing a number of headwinds, primarily a fiscal adjustment process that is contractionary to growth, a monetary policy cycle that is increasingly tighter and reactive with higher rates that lead to reduced growth. You also have the underlying influences of the Petrobras scandal, which that black eye may be out of the way, but you're still seeing very limited investment growth in Brazil. Investor sentiment, business sentiment towards Brazil remains very, very poor. But then, as if that weren't enough, you have a country dealing with an electricity and a water crisis that certainly feeds into reduced investor sentiment and business conditions, which are certainly contractionary to growth at the end of the day. So this latest IP number, I think, is just a reflection of the weak economic momentum that we're seeing in the Brazilian economy. And again, these trends are expected to continue through the remainder of the year.
Now looking ahead, both these countries will have data out for their interest rates on Thursday. What are you hoping to see from this data?
Okay, so for Brazil, we're expecting another 50 basis point hike in the Selic rate. And we expect another statement that is not very clear and leaves everything on the table, because that's really the message the Brazilian Central Bank has been hinting at in recent months. We're talking about a central bank that is in a very concerted quest to regain its credibility as an inflation fighter. And our sense is that not only do we get a 50 basis point hike tomorrow, but we'll likely see a final 25 basis point hike in the Selic in the coming months as well. And I think they should probably stop there by then, because again, the excessive tightening of monetary policy is without a doubt contractionary to growth. So they will definitely be taking action on that side. With regards to Mexico, we do not expect any changes in the policy rate in Mexico. We're of the view that the statement will remain fairly neutral as well. I think the Mexican Central Bank, they're obviously watching the peso, they're watching inflation, but more importantly, they're watching the Fed. And at the end of the day, we're of the view that the central bank will not preempt the Fed, but will instead react to the Fed. So our current forecasts call for the Fed to begin lifting rates in September, and we sense Mexico would then follow suit in October with a very gradual tightening cycle that takes the fondeo rate up by 50 basis points this year. And again, it's going to be very gradual because inflation remains very low, and growth at the end of the day remains below potential and somewhat weak. So the Mexicans are mostly reacting to the Fed and trying to limit the divergence in interest rates between the two countries. So at the end of the day, we do expect a very guarded monetary policy cycle in Mexico this year and probably into 2016 as well.
Well, that's all from us here at Dukascopy. Thanks for tuning in, and be sure to keep clicking back.